All right, Bulls and Bears, is this the beginning of the meltdown that we have been waiting for? Stock market down big, folks. On Monday, we're going to see how today plays out. I'm recording this on Tuesday, March 11th, 2025. And to those of you that have been on this channel, this sell-off is no surprise here. We had the Dow Jones down 890 points. We had the NASDAQ just had the worst day on March 10th since 2022. And I got a lot of emails. I can't respond to all these emails I've been getting on this channel that we told you right here. I said, you might want to sit back and kind of see how this all plays out with all these cuts. First, it started, back in November with who was going to win. And then, of course, after that, we saw the announcements of the cuts and the investigations onto where all this money's been going. And we know that the top 10% own, and I've been saying here about 90% of all stocks. So it looks like the top 10% are panicking right now. The elites, the top 10%, the wealthy, the mega wealthy, they're panicking and they're selling off their stock. But it's actually much worse than I've been reporting. For those of you that have been on this channel, the number that I put out there for many years is based off of some research that I did a couple years ago, but I had not done any updated research. So it's much worse than I thought. Remember the statistic that I've said many times. I've said the top 10% of the wealthiest people own about 90% of all stocks. 90%. Well, folks, it's much worse. Just in the past year or so, it's gotten even more consolidated with the wealth up at the top here. Take a look at this. And we have Business Insider reporting that now the top 10%, worse than I thought, own 93% of stocks. Right? So people that say that I'm over exaggerating how crazy and how insane that these markets are, the stock market, but the entire economy. People say that I'm just doom and gloom and just picking these. It's actually many times it's worse than what I'm reporting. Go figure. Like people think I'm the negative of the negative here, Mr. Doom and Gloom. But folks, a lot of times it's worse than I thought. I've been reporting 90%. It's 93%. So just in the past year, the richest Americans own the vast majority of the U.S. stock market, according to Fed data. They don't even try to hide it. Fed data is backing this up. The top 10% of Americans held 93% of all stocks. So the hedge funds, the investment firms, the Bezoses, the Musks, the billionaires, they own these. Now we're seeing a big sell-off. So what does that mean? That the average Joe that has a Robinhood trading account is hitting the sell button? No, they're left holding the bag, folks. It's the top 10% that get out first. And I think they were just waiting for the opportunity. And now with all these cuts, layoffs, everything else happening, and a lot of the money that they're finding that was sent out to all kinds of strange places, a lot of that ended up in the stock market, right? So a lot of the spending, even a lot of the foreign aid that we saw, a lot of it was funneled back to special interests who also put it in the stock market. Now, where's the money going to go? Is it going to go into digital assets, cryptos? Is it going to go into cash? Remember, money doesn't just vanish. It basically just gets transferred. So selling off the stock, somebody's holding the bag. So somebody's taking a loss on their stocks. And most of the people that are taking the loss are the bottom 90%, but especially the bottom 50%, people that just have money sitting idly in their 401k accounts. People are seeing their 401ks get crushed. People that aren't active traders, in other words, people that just kind of sit on it and just ride the ups and downs. A lot of these people are the ones getting hurt here. So, folks, big sell-off. But again, if you've been on this channel, this is no shock. This is no surprise. There's people out there shocked and surprised that this quote-unquote strong economy is now seeing the stock market melt down. Now, will that continue today on Tuesday and going forward? You're going to see some volatility. You're going to see some up days. But I think we're overall headed into a downtrend. I've said here several times, I see a topping pattern in the Dow Jones, in the NASDAQ, in the S&P 500. Showed the chart here many times. Folks, grab your popcorn, sit back and relax. The show is about to get very, very interesting. And if you suffered losses here, I don't know what to tell you. If you've been on this channel and you've suffered a big loss here in the stock market or in your portfolio, I don't know what to tell you, because I've said here time and time again over the past few months, things are about to get crazy, and they're getting crazy, and they're about to get crazier. This is just the tip of the iceberg. All the things that we've seen here over the past couple months are about ready to intensify, I think, times 100, right? And could the top 10% come in and buy the stock market and push it back up to all-time highs? Absolutely. But do you think they're going to do that in this environment? I think it's very unlikely. And remember, a lot of the people that were well connected, a lot of the insiders got very rich off of the way this money was just created and sent out all over the place, right? Because they knew where the money was going to go. They were connected to different entities that allowed their own portfolios to benefit from this spending. So folks, this is no shock. This is no surprise. This is just what had to happen eventually. I could rephrase that a little bit. It didn't have to happen, but the current administration is playing a big role in what's happening. But do they want the stock market to come down on their watch? Right? That's the thing. The current administration, they're going to get the blame for all this. And some people say they are to blame because they're coming in and they're disrupting, quote unquote, the system of money. And will they be able to sit there and say, yeah, this is not our fault when it's coming down on their watch? So it's going to be very interesting to see the finger pointing, as we always see, right? There's always the blame game with the left versus the right and all that stuff here. But a lot of news to get into today, folks. A Tesla stock absolutely getting smashed, folks. Look at this, down to $222. It had gotten up to, this is last fall and winter. In December, it got up to $389, folks. So almost chopped in half in just a matter of a few months. I told everyone here, electric vehicles, look out. They're cutting funding for a lot of these charging stations. That's just one of the many things that are being cut right now. So, and a lot of people are lashing out and selling their Tesla vehicles because they don't like what's happening. And folks, the game is on, folks. It's on. And grab your popcorn. That's all I can say here. Let's move on here to some other news. And we have the current administration out there saying, don't worry about it. The stock market plunge. It's not meaningful. It's not as meaningful as the business activity, because remember, they're bringing jobs back is what they're saying is going to happen because of the tariffs. And recession fears are in the air. But Jim Cramer's out there saying, don't worry about it. Don't let the Monday market sell-off scare you. Now, a lot of times what they'll do is they'll pump the market back up the very next day. I wouldn't be surprised to see a big recovery here today on Tuesday. But then if it's a downtrend, you're going to see bigger red days than you see green days. And then it continues up and down, up and down. But overall, it's a downward slope or downward trajectory if you're looking at a graph of the stock market. So we'll see how it plays out. But I've said here months ago, why be all in right now with all the risks out there, with all the pending changes and the new administration and so forth? Why be all in? Why not take some off the table? As I've said here many times, what I did. I'm in the lowest stock position right now that I've been probably in over 10 years. Kind of like Warren Buffett. We reported here many times Warren Buffett went to his record level of cash, and he continued to sell off stock here and there and ended up with the record level of cash. And you look at these things and you have to scratch your head and say, well, what does he know? What kind of risks does he see? Well, it's obvious. We talk about him here every day. There's so much risk out there, right? This whole house of cards, sandcastle, whatever you want to call it, is built on endless amounts of money created out of thin air. So now we're seeing major cuts to the money system, and this is just natural, folks. It has to come down. Now, with the money system the way it is, again, like I said a few minutes ago, could they pump a bunch of money back into the stock market? Absolutely. It's money created at the click of a mouse, literally. They create trillions of dollars at the click of a mouse. Ever since 1971, there's been no standard, no gold standard, so there's no limit on how much money they can just throw out into the economy, which some people call helicopter money. And according to my estimates, the value of all the stocks sold off just on Monday was about $4 trillion. $4 trillion. And that's just the tip of the iceberg, folks. Or it's a small blip if you look at the big picture on the stock market. Let me go ahead and bring up a chart here. And we'll start off with the S&P 500, folks. This is a year-to-date chart. Let's go out to a one-year chart. So year-to-date, it looks pretty significant, right? So we're down. We're in the red year-to-date. A one-year chart, we're still up, but you can see this deep slide to the right side here. Ever since mid-February, right? We've seen this kind of double topping pattern right here, and then right here, and it's coming down pretty significantly. But let's zoom all the way out to a long-term chart that goes all the way back to, looks like the early 80s. And what do we see here? I mean, look at this. This is 2008, right where my cursor is. That, at that time, was considered a mega bubble, right? And then you have the 2000.com crash before that. So you saw kind of the double top there, the 2000.com crash and the financial crisis topping, right? S&P 500, pretty level there. But now look at this. People think that this was natural, that this was normal. People thought this was organic growth, right? And by organic, I mean that the funding of the stock market would have come from the average person, the average working class individual, the average middle class person has extra money to invest, so therefore they put it in the stock market. No, that's not what this was, folks. This was, again, funded mostly by the top 10%, by the mega wealthy, by the institutions, the hedge funds, and the retirement corporations funding this stock market rally, folks. Now these same people, the elites, the mega wealthy, the billionaires, the institutions, are selling off their stock. All right, looking at the Dow Jones here, similar, right? .com era, financial crisis era, and look at today, folks. So the declines that we've seen over the past month or so, pretty small compared to the run-up that we've seen over the past, especially the last 5 or 10 years, has been insane. Now, again, could the current administration come in and say, hey, you guys better, you top 10%ers, you better quit selling off your stock. You're making the market look bad under my watch. We don't want this. And maybe he'll threaten them in the background. Who knows what goes on in the background? But we're going to find out here for sure very, very soon. And so if you've been out of harm's way, this is going to be fun to sit back and watch. But there's actually some good news for most people here. We have oil down now. Just under $66. This is a one-year chart we're looking at here. Within the year, it had gotten up to close to $87. So from 87, which was back in April of last year, down to now just around $66. So good news for the price of gas and the price of energy. And also the U.S. economy was just downgraded by Goldman Sachs. And they're looking at the writing on the wall. They're looking at the obvious. Too many disruptions. The old system is being revamped. And I think we're going to be headed into a whole new financial world by the time this unwinds, folks. And I've said here many times, it's going to get a lot worse before it gets better. And I like to remind people of this every now and then because people think that I'm just all negative here. No, it's going to be better. Ultimately, it's going to be better. But this all has to play out. The bubbles need to go bust. Will this lead to a housing bubble bust? Will this lead to a stock market collapse? Will this lead to asset prices coming down? I mean, oil's already starting to come down. Will this lead to other asset prices coming down? Will we see a lower cost of living? Will price levels come down? Will things get easier at the end of this? I think so, yes, but it's going to be very difficult in the meantime because when you have this transition, you have a lot of job losses. And a lot of the job losses right now are just basically they're taking an axe to the entire labor force right now, especially with all the federal jobs, right? So this all has to play out, folks. There's a lot of malinvestment and a lot of propping up of many different sectors because of the easy money policies that have been going on for decades, right? And it just took a series of things, including these cuts, to start bringing this house of cards down. Now, is this the beginning of the collapse? I'm putting my money where my mouth is. I'm out of the markets for the most part. I still have some stocks that I think are going to be good long term. They pay dividends, but I'm accumulating hard assets, still accumulating metal, especially silver, because I think ultimately we're going to go back to a asset-backed currency. Now, some of you still laugh when I say that. Folks, this still has to play out. These things that have been going on for 100 years or more, they can't just change in 1, 2, 3 years. I've been doing this channel for a few years. Things have changed significantly. Look at all the differences right now between just a few years ago with the cost of everything, the price levels, the markets, everything has drastically changed. And I think we're going to be in for some big surprises, but they're not all bad surprises. There's going to be some good surprises on the other side. And remember, we still have this government shutdown threat. They're threatening to hold back funding because they don't like the way that the operations are happening right now with all these cuts, right, with everything else that we're seeing. So we have some political turmoil happening right now, political battle. Will one side shut everything down and not fund the government to stop what the other side is doing, right? Many people say that the risk of that is very high. Other people say that this is all a show, that both sides are just doing this to create some sort of excuse to let this economy finally deflate. Also, the auto loan late payment situation just got worse. According to Auto Guide, Americans are falling behind on their car loans. Yes, we all knew that. We've been talking about that. But it's getting more pronounced now, as now we see about 6% of all loans, not just subprime, but 6% of all vehicle loans are now 60 days late or more. And what we're seeing right now is we're seeing entities and banks that give out these car loans, they're working with their customers, right? They're allowing them to be 1 or 2 months late instead of repossessing the vehicle right away. The number of people 90 days past due is only 3%, right? So it's not totally chaotic yet. And again, banks are working with people. So if you're behind on your payment, call your bank, let them know that you're still going to try to make payments, unless you just think it's not worth it at all and you're underwater on the vehicle and you just want to let them take it back. Of course, you can do that. But if you're someone that needs your vehicle, try working with your financial institution, because they don't want to repossess millions of vehicles all at once and watch the asset prices tumble. Because when you have a lot of repossessions at once, values start to tumble because you have the supply side that gets stacked up and the demand is still subdued because of all the debt out there that consumers have. And of course, the banks, they don't want their assets that they've given loans out on, they don't want their assets tumbling in value. So work with your bank if you feel that's the position that you're in. All right, people, let's move on to this. I thought this was pretty interesting. We've got rising credit card fees prompting local businesses to prioritize cash payments. Now, this comes out of, not sure if it's Ohio. Anyways, it's just a story about one business, but I think this is nationwide because these credit card companies are charging pretty big fees just to swipe a credit card, right? So the businesses are paying these fees in many cases. In other cases, they're passing the fee along to their customer. Have you ever went to a place where you've swiped your card and they say you got to pay an extra $1 or whatever to use the credit card? My local barbershop does that. They charge an extra $1 if you pay with the credit card. So I always go there with cash. And small businesses, I try to use cash. But look what the credit card companies are doing, folks. Credit card companies are really raking in some big, big money. And I've got a good friend that actually makes a ton of money off of this because he sells the credit card machines and he does merchant services. So he gets a cut of every transaction. But according to the co-owner of this little coffee shop, he spent $26,000 on credit card processing just in the year 2024. And basically he says that's $40 for every $1,000 of sales. So that comes out to, what is that, 4%? Yeah, $40
where many
out of
good
1,000.
childhood friendships begin. To bend over,
All
struggling
right, sorry,
to
that's
breathe.
weird.
Jason and
This
White noticed immediately
report that I'm
and
reading just
came
started
to
playing
his
some
rescue,
video that was down here.
squeezing his ab.
I don't know what that video is about, but we're gonna pause that because we're talking about $40 out of $1,000, folks, that this business had to spend, and that's 4%, folks. So these credit card companies are raking in the profits, and you have to wonder, how these small businesses can stay afloat here with $26,000 just in credit card transactions, and that's just one of their things they have to pay: the electricity, the lease for the building, the wages, insurance. I mean, it's very, very difficult for small businesses in this environment. And more on to this coffee shop here. He says, quote, "We do not pass that price on to our customers. We have a receptive customer base. So really, we just keep the sign up." And this, if you look at the sign, if you're watching this, it says cash is preferred. Cash transactions allow us to retain the full value of each sale. And it talks about how much they paid in credit card fees just in 1 year. He says this is to keep awareness of the fact that it costs us money to run your credit card and that cash is always preferred, especially for smaller businesses. So one thing to keep in mind when you're going to these smaller businesses, that they do have a lot of costs, a lot of fees. A lot of these people are working, even business owners that you would think, kind of have it made. A lot of them are working 10 or 12 hours a day in their own businesses because they're their own manager, right? A small business that can get to a place, or a small business owner that can get to a place where you hire a manager and you can have them run everything and you trust that manager. That's, I think, a small percentage of all the businesses. A lot of it is owner operators, also owners behind the cash register a lot of times, which is true for my local barbershop. I've got the owner down the street here at my barbershop. The owner actually is in there cutting hair. And I think that's pretty common with barbershops and a lot of small businesses. So maybe use cash at some of these places and help them out a little bit. If you have cash, that's the thing. The savings rate is so low now. We're near a 40-year low in the savings rate. A lot of people just don't have cash. The people living paycheck to paycheck, which is close to 70%, they're basically living off their credit cards. They don't even have much cash to use, even if they wanted to. That's the sad part of this whole thing. And that's why I like to remind people, the wealth that you see in the stock market is concentrated at the top, with 93% of stocks owned now by the mega wealthy, aka top 10%. And it's about ready to get a lot more difficult, especially for certain people. Look at this here. The current administration just signed an executive order limiting eligibility for public service loan forgiveness, right? So we saw a lot of people working in the public sector. They were eligible for student loan forgiveness when others weren't. So now they're chopping that off there. They're saying these people shouldn't be allowed to get loan forgiveness when other people aren't allowed, right? So they're maybe leveling the playing field, it looks like. And they go on to say that also nonprofits are being targeted as no longer going to be eligible for loan forgiveness. And we're starting to see these enormous levels of debt bleed over into some other areas. Look at travel right now. We've got Delta Airlines out there, stock plummeting after the company slashes guidance, citing sinking consumer confidence, right? So people see what's going on. They look at their own pocketbooks. They look at their own financial situation. And we're going to see a lot more stocks, I think, take the downward path here as this continues to play out. And you're also going to see more pain with these other cuts too. USDA cancels $1 billion in local food purchasing for schools and food banks. What do we tell you right here in this channel? Food banks are feeling the strain right now because of a lot of this funding cuts, folks. And this is going to play out very quickly. It's not something you're going to have to sit here and wait 4 or 5 months. This is going to be day to day to day. All this craziness, folks, unwinding and unfolding right before our eyes, right? So make sure you're subscribed. Please hit that subscribe button. Keep this channel alive, folks. I think there's some powers that be that may not want you to have all this information that I present. I do spend a lot of time compiling this information, so I appreciate your support. Just by subscribing, you help this channel, and we'll see you here next time. Hopefully, as always, keep stacking. Bye for now, everybody. Peace.